All right, let's dive right in. Today, we're talking about the Japanese real estate giant Sumitomo Realty. Now, they just dropped some absolutely stellar earnings. But here's the twist. Instead of taking a victory lap, they've announced a massive, and I mean massive, shift in their entire corporate strategy.
So that's the big question, right? The company is at the absolute top of its game, and yet they're deciding to tear up the playbook and start a completely new chapter. Why on earth would you change a winning formula? Well, let's get into it and break down what this bold new plan is all about.
So first up, this major strategic shift. I mean, after a run of just incredible success, Sumitomo is making a huge, calculated bet to completely reshape where they're headed.
So here's the core idea. They're sitting on this mountain of value, tied up in older, non-essential properties and in shares of other companies that they've literally held for decades. The new plan? It's all about unlocking that capital. They're going to sell off those assets and plow the money back into new, high-growth projects. This is a fundamental shift, They're moving from a strategy of holding on for stability to one of selling for some serious growth. But what gives them the confidence to make such a big bet? Well, the answer is pretty clear when you look at their latest financials. They're coming from a place of just incredible strength. Now, if you look at their first quarter results, at first glance, you might see that revenue number is down a bit. That's really just about the timing of when they hand over the keys to new apartments, so don't get too hung up on that. Instead, look at that operating profit. That's the number that really tells you how healthy the core business is, and it's up almost 4%. That's what we want to focus on. And in fact, that 101.7 billion yen, that is a new record for their first quarter, a record. So we're not just talking about a good quarter here. This is literally the best start to a fiscal year they have ever had. And that financial firepower, that's the foundation. That's what's letting them be so ambitious with this whole new plan. So where's all this record profit coming from exactly? To really get it, you've got to look at the powerhouse segment that's driving these numbers, the engine of the whole operation. Okay, so take a look at how this breaks down. The real estate leasing business, that's their huge portfolio of office buildings, mainly in Tokyo, is the single largest contributor to their profit. It's not just a part of the business, it is the absolute engine of the entire company. And this engine isn't just chugging along, it's getting stronger. Look at this. Profit from leasing jumped up significantly compared to this time last year. It's this consistent growing cash flow that really makes everything else they're planning possible. So why is it growing so much? Let's dig in. Okay, so here is the cause. Their office vacancy rate in Tokyo, it's dropped to 5.7%. That's the lowest it's been in a whole year. And what does that mean in simple terms? Well, it means fewer of their buildings are sitting empty. More companies are signing leases, moving in, and they're willing to pay top dollar for that prime office space. And here is the effect. That lower vacancy rate, it translates directly into cold, hard cash. This number right here shows you that powerful link between what's happening on the ground, filling up their buildings, and that record-breaking bottom line we saw. It's really that simple. More tenants equals billions more in profit. Okay, so their leasing engine is humming, giving them all the financial muscle they need to fund this ambitious new plan. So let's get into the nitty-gritty of that strategy. Now, to really understand this plan, we have to talk about a key concept: cross-shareholdings. For decades in Japan, it was super common for big companies to own shares in their business partners, in their banks. It was all about cementing those relationships. But, and this is the crucial part, there's this huge push happening in corporate Japan right now. A push for companies to be way more efficient with their money. And investors are looking at these old shareholdings and basically saying, that's just dead money sitting there. It's not working for us. So Sumitomo, they're responding directly to that pressure. So what you're seeing here is a complete before and after of their entire mindset. The old way, it was all about stability, holding on to assets, maintaining those old relationships. The new strategy? It's 100% about efficiency and growth, and they are not messing around. They plan to sell off a whopping 400 billion yen worth of these shares, plus other non-prime properties, just to free up a ton of cash. So where is all that money going? Well, it's not just going into a savings account. It's being funneled into some really specific, really ambitious projects. They're funding new business lines. They're covering some rising interest costs, which is smart. And then there's the big one. They're fueling a massive, and I mean colossal, 700 billion yen development project in Mumbai, India. And they're targeting projects like that one because they believe it can deliver returns of over 10%. That's the goal here.
Okay, so this is a super aggressive growth plan. But what does it all mean for investors? Well, it's not just about spending money. The company is being very, very clear about how this whole new strategy is going to directly benefit its shareholders. And you gotta love this quote from their official announcement. I mean, it just perfectly sums up their whole philosophy. What they're doing here is reassuring investors. They're saying, hey, don't worry, we are not selling our crown jewels, the chickens that lay the golden eggs. Instead, what they're doing is selling off the less productive assets, so they can use that money to go out and create a whole new flock of golden egg-laying chickens for the future. It's about multiplying, not just eating.
And look, they're not just talking the talk. They're backing this up with immediate action for shareholders. First, they've announced a 10 billion yen share buyback. Second, they're bumping up their dividend forecast, not by a little, but by over 20%. And third, they're actually canceling a pretty big chunk of their own stock, which, as you know, makes every share that's left out there more valuable. So yeah, it's this powerful three-pronged attack designed to return value to investors right now.
So there you have it. You've got Sumitomo Realty at the peak of its power, leveraging that record strength to fund this dramatic pivot. They're shifting toward global growth and capital efficiency, and at the same time, they're boosting returns for their shareholders. It is, without a doubt, a really bold and confident move. And so the big question we're left with is this: will Sumitomo's huge bet on the future actually pay off? Will it build the kinds of returns they're banking on? Thanks for joining The Explainer.